Hello guys, my name is Colin and this is Colin Talks Crypto. I want to talk to you about Bitcoin and how I see the future price action playing out for BTC. I really see two main scenarios right now, one bullish, one bearish, and I'm going to explain to you why I am personally cautiously optimistic right now. Hey guys, I hope you're doing very well. So, as you probably know, unless you've been living under a rock, Bitcoin has been channeling sideways, slightly up, over the past several months. It's been quite boring, in fact, but we are waiting for some decisive moves out of this channel to see what the heck is happening with Bitcoin. And I've been looking at it very closely, and of course I have my Colin Talks Crypto Bitcoin Bull Run Index. I might touch on that a little bit later. But let's focus on the Bitcoin price itself. Now, as I said, I see two main scenarios, and I printed out a couple tweets here just to keep myself focused for this particular video, and I'll try to keep it short here. But I see two main scenarios for the Bitcoin price. So I'm going to detail each scenario, and I'll give my odds for each one happening. So the first scenario, which I personally give about a 60% chance of happening right now, is that we are still in a bull run, but we've been seeing a very long correction, an extended cycle, if you will. And basically in this first scenario, I think that what's going to happen is that Bitcoin is going to go sideways, continuing to range sideways anywhere between 29,000 and 50,000 until we see the next peak, either this year or next year. Now that's interesting because we've never had a cycle like this before. That would mean like I said, we were seeing an extended cycle. That's a new thing. It would be greater than 4-year cycle at that point. Imagine if we saw the Bitcoin top in early 2023, just as an example. Well, that would be like a 5-year cycle. And that's interesting because not only does that break the 4-year cycle pattern that everyone feels is so solidly ingrained because of the halving event, really, but also because it butts up into the next halving event, which happens in 2024. So we're like 2 years away from that, and we're going to have a bull run peak, not really in the middle of the cycles anymore, kind of like butting up into each other. So this particular scenario sort of supports the idea out there of a lengthening cycle. So again, in this first scenario, we're ranging between $29,000 and $50,000 per Bitcoin. And this would basically mean that we are in a correction. And some people are calling, I would say most people are actually calling this a bear market right now. There's a lot of fear, and many people do believe that we are in a bear market. And it's a bit of semantics. It's whatever you wish to call it. I personally, right now, I'm still calling it an extended correction. And until it decisively breaks down below 29,000 and consistently stays below 29,000, I will continue to call it an extended cycle. If it does break down below 29,000, then I think we're up into option number 2, scenario number 2 of what Bitcoin could be doing here. Now again, with scenario number 1, we're ranging sideways for the rest of this year perhaps until we peak out, or maybe even into next year. I believe that this has a 60% chance of being valid because we didn't see a blow off top. And it's not to say that we have to, but it definitely would be new territory to not see a blow off top. That's why I give this scenario 60% chance. We saw a 3.5x multiple over the last $20,000 bull run peak in 2017. $69,000 is 3.5x. We've never seen that low of a multiple before. It's usually like 19x or 30x. So that's a clue to me that maybe there's more energy, more momentum left in this particular bull run. And just because everyone thought it was going to peak in December of 2021, myself included, I've definitely learned a lesson on making predictions. And that's why I made the CBBI, which is time independent and price independent, that the bull run's going to do what the bull run's going to do. And we're just going to look at metrics to determine when we might see the peak. And again, that's CBBI.info, the Colin Talks Crypto Bitcoin Bull Run Index. Good for our bull run peaks and bear market bottoms. those are some of the clues as to why I think that the bull run is not over yet. And that's scenario number one. And that would mean that the 4-year cycles are basically broken, that that's not a reliable metric to go by, because we would see a 5-year cycle or maybe even greater. In this particular scenario, scenario number one, the CBBI would be validated, most likely, because it not only did not show a super high score for the $69,000 Bitcoin price, it would ideally, hopefully, we will see, show a 90 plus score when we do approach the next blow off top later this year or 2023. So to me, scenario number one does support CBBI being correct. It supports $69,000 as being a sub peak, and we'll only know that in hindsight. Now let's jump over to scenario number two. This is a more bearish scenario, and I give this about a 40% chance at the present time of coming true. In scenario number two, this would be, to me, proven when Bitcoin consistently drops and stays below $29,000. It's not just a wick and a bounce back. That would still be number one, scenario number one to me. And if Bitcoin does drop below $29,000, which is a major support line, and stays there, to me, that means a couple things. That means that we're in a bear market. I will decisively state that I feel we are in a bear market. This also means that the CBBI is invalidated. And I will admit that. I will say, okay, you know, $69,000 was the peak. The CBBI only indicated like a 70 or so on the score, and yet that was the top. So CBBI did show that it surged, but it didn't show that 90 to 100 range that we were hoping for a reliable profit-taking index. And lastly, what this means is that our next cycle top will likely be after the next 2024 halving, probably 3 to 6 months after that halving. So in scenario number two, this means that $69,000 was the peak. That was the bull run top. It wasn't a blow off top. It was definitely like a rounded double top, but nonetheless, scenario number two admits that that was the top. And this means that the next peak is likely going to be after the 2024 halving event, probably 3 to 6 months after. And this also means that the bear market floor is going to be likely below $29,000. It could be as low as $20,000, which would be on par with the previous 2017 all-time high. I'm just guessing there. I really don't know where the bear market floor would go. But one clue I have that we would not see a tremendous drop like we've seen in past bear markets is the fact that, again, the peak wasn't that high, so therefore the drop probably won't be as far. The peak of $69,000 was only 3.5x the previous all-time high of $20,000. Therefore, we're probably not going to see a 90% plus correction. We might only see a 70% correction or 60% correction. I think we've already seen about a 50% correction. So I don't think that we'll personally see that much lower. I definitely don't see us going below $20,000. Anything can surprise me. You know, this cycle is itself proving that this could be different if scenario number one is true. And so to conclude, I do think that scenario number one, the bullish scenario, is the more likely outcome. I'm cautiously bullish. I'm cautiously optimistic because all it takes is a breakdown from where we are below 29,000 and staying there, and we're out of the bull run. And the longer that we channel sideways, the more that I think that the second scenario is a possibility. If we continue channeling sideways and we just don't break up and we keep going sideways, I think that there's a greater and greater risk that we actually break to the downside, and the odds of scenario number two occurring increase over time. So my advice is be ready for both outcomes, just in case it is actually 2.5 more years until we do see a new price peak. Again, I don't think that's the most likely scenario, but with a 40% odds of that happening, that's not out of the realm of possibility. And so, like for myself, I want to survive off of passive income, off my crypto. And so what I've done is I've taken some cash, enough to hold me over until that 2.5 years, should I need to wait that long. But I'm holding otherwise as much crypto as possible, and I'm happy with my crypto portfolio selections in the case that I do need to hold and wait. I'm not going to panic sell. I've already taken some profits, and I'm just going to continue to hold through. So I now feel comfortable holding through to the next bull run peak, whenever that is. Maybe that's in 2023, maybe that's this year for scenario number 1. Maybe that's in 2024 or 25 if it's scenario number 2. And in either scenario, I can weather that particular outcome. It's really interesting. I'll just speak for myself, there's a stress factor that I perceive when I'm not adequately prepared for one of the two outcomes. And it sort of manifests itself by me feeling a bit of uneasiness about my portfolio, especially when we start to see dips that are close to breaking downward out of the channel. It starts making me, kind of forcing me to look at, well, what if we hit a bear market right now? What if the bull run is over? Would I be prepared? And that's what kind of woke me up recently into thinking, well, no, I'm not really totally prepared for that outcome. And that's why I realized I was too heavily weighted on a bias toward a bullish outcome. And so then I took some profits. And it's interesting because the moment I did that, I now feel totally at ease. So I would just recommend that as a technique. If you feel uneasy about one of the two outcomes, if you feel like we must have a bull run peak and you can't even fathom that we could have a bear market, I would ask you to reevaluate your certainty, because I don't know how certain we can really be right now of that. Speaking personally, again, I'm 60% certain of a bull run occurring sooner than later. So I think that it's very important to be balanced and to be ready for the worst case scenario, because as we all know, altcoins are tremendously reliant on the performance of Bitcoin and are basically amplified volatility. And the further down the market cap ranks you go, I would argue the greater that amplification occurs. Like Ethereum isn't going to be as volatile as the 100th position coin on CoinMarketCap if Bitcoin tanks. They'll both tank, but Ethereum will tank less. So if you're holding a bunch of obscure, super low market cap ranking, super low market cap coins, and you don't think there's any possibility that a bear market could happen, I would just ask you to reevaluate that, because if it does occur, I'm not saying it will, you might really feel a lot of pain. So for myself, I feel comfortable with my portfolio right now. I consider it mostly blue chip cryptos. I've got a little bit of Bitcoin. I've got a lot more Ethereum. I recently sold some of my Luna for Ethereum, and that has been a good trade to this day. I've got quite a bit of Luna still. I would say that's almost equal with my Ethereum holdings. And those are my main three: Bitcoin, Ethereum, and Luna, the Terra Luna blockchain. I've got some stable tokens. I've got some UST. Like I said, I'm preparing for that scenario number 2, that worst case scenario. And then I've got some DeFi kind of lower market cap ranking coins, those moonshot potential coins, those ones that can maybe do 100x, things like Vader Protocol, Hex. I guess those are really the main ones I can think of. I don't hold a whole lot of them anymore. And those do not make up a very substantial percentage of my portfolio. But I do think it's important to hold a small percentage of those, because there's a chance that they could moonshot, and then 1 or 2% can turn into 10% of your portfolio. And that, I think, is worth hedging, with a small percentage of your portfolio. Okay, guys, so I guess that's about it. I just wanted to break down for you how I see the current Bitcoin price situation. And we are currently around $39,000, with the Bitcoin price really testing that lower channel support line again and again and again. And the number of times it has tested that is far greater than the number of times it has tested the upper bounds of that same channel line. And I feel like it's losing steam. So I think what could happen is we could see a capitulative dip, not a scenario number 2, not a bear market scenario, but just a capitulative dip, scaring the S out of the market, and then a rebound, a rapid rebound, and climbing to new all-time highs. That's still scenario number 1 to me. I could see us dropping down to, for example, $32,000, scaring the crap out of the market, and then rocketing up after that and going to new all-time highs by the end of this year or early next year. That, I think, again, is the most likely outcome. So I am cautiously optimistic, but I wanted to break this down in a realistic manner for you guys so you can take a look at how you are positioned and to balance yourselves accordingly. I'm trying to be balanced in my opinion and not be blinded to all the potential outcomes. And I can just tell you from personal experience, when you do correctly position your portfolio so that you can weather the storm or you can ride that bull run, each with relative comfort, you will sleep a lot easier at night. Okay guys, I hope you're doing fantastic. I wish you the best of luck, and let's ride this Bitcoin bull run together. Have a great day.